Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. Let's have a look at the stories for the day. Business Standard hosted a Tech Talk conference on Friday on the theme of artificial intelligence and business. During the event, Union Minister Rajiv Chandrasekhar, who was also the chief guest at the event, spoke in detail about how AI is being used in governance and its future. Later, a panel comprising industry leaders from Dell, IBM, TCS, Salesforce, SAP, and Mylan Foundry to share their thoughts on how AI is being integrated into their products and services. Let's have a look at how India is using AI to bridge the gap between the have and have nots.
The Indian government appears to be actively working in the artificial intelligence sector. The idea is to optimize advanced technologies for better governance and planning. Speaking on how the government hopes to use AI to solve governance problems, Minister of State for Electronics and Information Technology and Skill Development and Entrepreneurship, Rajiv Chandrasekhar, had this to say at the recently concluded Business Standard Tech Talk.
The whole program that has been envisaged by the government is really built on what the Prime Minister said, that we must make AI work for India, and B, that AI can be a kinetic enabler of the digital economy. Just like UPI was built to solve a government problem and has created one of the most vibrant fintech ecosystems in the world, we believe AI can solve a governance problem, make governance smarter, make governance and the whole process of scheme planning, delivery of schemes much more intelligent, much more data-led.
In February this year, while addressing a post-budget webinar, Prime Minister Narendra Modi said the government is creating a modern digital infrastructure to ensure that the benefits of digital revolution reach everyone. In the Business Standard Tech Talk, while responding to a question by Business Standard Editorial Director Ashok Bhattacharya, Minister Rajiv Chandrasekhar narrated an anecdote highlighting the reach of the Indian government's digital prowess.
And I will give you examples of this that I have personally encountered. I went to Nagaland. Northeast is my area of political responsibility, so I go there repeatedly. I drove 9.5 hours to a remote district where no minister had visited that district since independence. Wow. So 9.5 hours, bag breaking, and so next day morning, early morning, 7:38, the community had gathered, 500 women, elders, all of the community. And so the first question I asked was, how many of you have digital identity Aadhaar? The entire room, hands up. How many of you receive your benefits on your DBT? Entire room. How many of you have connection to the internet? The entire room.
The minister said the government is ready to spend $10 billion on semiconductors, $20 billion on electronics manufacturing, and about $200 million on AI. He further added that financing will not be a challenge since advanced technology is going to be a key growth factor. The government is also creating massive data sets which will be available for use by researchers and startups. Chandrasekhar emphasized that AI will be a transformative and not a disruptive tool.
We started this digitalization process by building these independent platforms. So you had UPI, you had Aadhaar, then you had CoWIN, then you had Skill India, then you had education. And now we have consolidated that and integrated that into India stack. So you have an identity layer, you have a finance and payment layer, you have a storage layer, and you have multiple applications that sit there as a stack. And people can use, state governments can use it, communities can use it as a stack or as individual pieces. Now we will bring in learning and intelligence into that stack, which will sit off all these big, huge amounts of data that we have about consumer behavior, about citizen behavior, what they are consuming.
The Tech Talk conference also hosted industry leaders who discussed integration of AI and machine learning into their products and services. Speaking of a particular use case which has the potential to further bridge the gap between the have and have nots, Gopi Chand Katragadda, who is the former CTO of Tata Sons, had this to say.
With all these new technologies, the key thing is if you're using AI, for example, to look at ultrasound scan or an X-ray scan or a CT scan, it's good. But what is better is rethink healthcare. So if you can rethink healthcare in terms of simpler equipment which can detect wellness early enough when it goes off normal, then you're doing much better. You can take healthcare into the rural sector. So we are looking at detecting chronic inflammation using a fusion of bioimpedance, heart rate variability, not heart rate itself, but heart rate variability, and a picture of your face, because there's a lot of information on your face. And fusing that to get to chronic inflammation means I can detect chronic diseases much earlier using AI.
The panelists indicated that AI and machine learning have phenomenal potential to transform business and governance. However, a critical aspect which is hand in gloves with the new technologies is the ethical usage of AI. This was a highlight of the discourse at the Business Standard Tech Talk. It remains to be seen how seamlessly the government and India Inc. integrate AI into their services.
A recent study has found that artificial intelligence is better than humans at assessing heart ultrasounds, which is the main test of overall cardiac health. Speaking of fitness, preventive and supplementary medicines, which come under the broad umbrella of nutraceuticals, are increasingly making inroads in the country. And so are health influencers advising them. But what is the regulatory framework around them? Tariq Ahmed's report has the answer.
Nutraceuticals is a broad term for non-pharmaceutical products. Dietary supplements like vitamin tablets, protein powder, and weight loss supplements like Garcinia cambodia are part of the nutraceuticals category. Before the COVID outbreak, protein powder and other dietary supplements dominated the nutraceutical market in India. Post-COVID, more and more preventive healthcare products started coming into the market. According to the Ministry of Food Processing Industries, the nutraceutical market in India is worth $4 to $5 billion and it is expected to become $18 billion by 2025. In 2020, dietary supplements, which are a major part of nutraceuticals, were valued at $4 billion. And this is expected to reach $10 billion by 2026 with 22% year-on-year growth. However, nutraceuticals doesn't come under the purview of medicinal drugs and are allowed to be advertised as food and beverages. A lot of popular nutraceutical brands have Bollywood actors and celebrities as their ambassadors. For instance, actress Shraddha Kapoor is the ambassador of dietary supplement brand Power Gummy. Wellbeing Nutritions, which sell pure marine collagen powder, and a plant-based nutrition brand Oziva have actors like Dalkeer Salman and Deepika Padukone as brand ambassadors. Most nutraceuticals are promoted by social media influencers today because of the personalized follower base of fitness, beauty, and lifestyle influencers in social media. The promotion of nutraceuticals are effective. Also, the chances of endorsements directly translating into sales are higher. Social media platforms share web address of the brands and e-commerce platforms where customers can buy the products in just a few clicks.
There is a thing called scheduled drugs and unscheduled drugs. So as far as the scheduled drugs are concerned, you cannot advertise those scheduled drugs, and nobody can prescribe those scheduled drugs until unless you're qualified. until unless you are qualified to practice modern medicine, which is called allopathy. Uh, but as far as the supplementaries are concerned, there is no as such, they don't fall under the scheduled drugs. So of course, uh, people are advertising those supplements, and of course, health influencers are, I'm not saying everyone is doing is promoting a falsehood in the society, but yes, there needs to be a guideline, so that because we are dealing with national health, and anything which is going against it will be danger to the national health.
But the products often make unrealistic promise to lure customers. Social media influencers often promote the products in a personalized manner as a suggestion which can deceive customers. The side effects that are related to the products and the relationships between the manufacturer and influencer are not often revealed explicitly. That's when regulators intervened. The Advertising Standards Council of India reportedly processed 155 complaints related to the nutraceutical sector between April 2022 and February 2023. On March 10th, Food Safety and Standards Authority of India wrote to its state units to take action against non-compliant nutraceuticals and health supplements. In an interview with Business Standards, Secretary to the Department of Consumer Affairs, Rohit Kumar Singh, had said that the department is raising its regulations on health influencers. He mentioned that the new guideline will make it mandatory for the influencers to disclose their qualifications for dispensing advice on health and wellness. Previously, the Ministry of Consumer Affairs had released a guideline that made it mandatory for the influencers to reveal the nature of promotion and if they are getting any benefits out of it in an explicit manner.
From an enforcement perspective, we're still at a nascent stage in terms of being able to control or curtail promotional advertisements that go beyond the regulatory framework that are applicable to manufacturers and importers of these kind of products. So on one hand, you have food specific regulations that are applicable to the producers or importers of these products. But on the other hand, when it comes to influencers, you have another set of regulations altogether. So to be able to marry the two together, it's going to take some time for us to be able to start enforcing the entire value chain of producers plus marketers plus advertisers and content creators. But at this stage, I can say that the framework is in place. Of course, it is, I think, the first attempt at this kind of a framework. So obviously, there could be improvements in terms of what could be done better. But we are in the process of trying to get to a situation where we can control or at least make sure that the kind of content that is put out, which is paid or promoted, is, I would say, with a lot more due diligence and within the ambit of what is legally permissible.
Regulators have started taking strict notes of the way nutraceuticals are promoted by influencers. And then there are technical challenges regulating social media platforms where millions of contents get uploaded every second.
The markets, meanwhile, have been stuck in a range since the past few weeks, with the Sensex oscillating between 57,000 and 61,000 levels. Can it break out of this range anytime soon? How should you approach the markets as the March 2023 quarter earnings season begins? Puneet Wadhwa spoke with Ajit Mishra, Vice President of Technical Research at Religare Broking, on what the technical charts suggest.
Hello and welcome to the show. I'm Puneet Wadhwa, and today we have with us Ajit Mishra, Vice President for Technical Research at Religare Broking Limited. Hello, Ajit, and welcome to the show.
Thanks, Puneet. Thanks for having me.
The markets have been stuck in a range. Do you see a breakout on either side anytime soon? And what are the key levels for the Sensex and Nifty you are watching out for?
So that's true, Puneet, that it's almost a year now that we are seeing the market is hovering in a broader range. But of late, we are seeing a bit of a sign like wherein we can see that this recovery, this consolidation may end. But for that, we need 18,200 on Nifty and close to around 61,700 in the Sensex to be surpassed decisively. Otherwise, we may again see some profit taking and consolidation in the near future. But midterm outlook looks slightly on the positive side as long as we are holding 17,200 mark. So broadly, if you see that 1,000 point kind of a range, 17,200 to 18,200 in the Nifty, and 58,400 to 61,700 in the Sensex is what we believe that markets likely to trade from the medium term perspective.
So from a broader perspective, do you think that the bull market that started somewhere in April, May 2020 is over now? And what is the overall structure look like?
So it's more of a consolidation because if you remember that the kind of recovery that we have seen, or a surge that from the March 2020 lows, it's obvious that market spend some time to digest those gains. That is what we are seeing. So it's not that the long term trend has changed. It's just that markets are digesting in, and maybe in the latter half of this year we'll see that the resumption of trend possibly on the positive side.
So how do investors navigate this March quarter result season that has begun, last week? What should their market strategy be? Do you recommend buying the dips or selling the rallies?
So definitely, when it comes to market overall, it's a buy on dip market, and as you said that we are eyeing 18,000 plus zone of late. So above 18,200, in fact, the buy is going to change from the medium term perspective also. So it's a buy on dip market, and I feel that, despite being a buy on dip market, stock selection and sector selection is very critical.
Within the broader framework of the Sensex stocks, there's a wide difference. I mean, there's a lot of difference in which how the stocks are performing. On one hand, we have stocks like RIL, which were close to their 52-week lows, and on the other hand, you have stocks like ITC and L&T that are trading close to their 52-week low highs rather. What's your strategy regarding, let's say, RIL, L&T, and ITC?
All eyes are on Reliance now because other sectors they have performed well, especially wherein we have weightage like financials, banking, ITS is trading subdued, but all the other sectors are pitching in. So Reliance it's almost 1.5 years now that we are seeing this range 2150 to 2750 levels, and we are closer to the lower band of the same. So as of now, indications are in the favor that the negative tone or sideways tone will continue until we decisively break 2450 levels on Reliance and sustain above the same. So maybe post numbers, we might see some trigger, but as of now, there is no indication. So from an investor perspective, I would feel that if your view is, let's say, medium to long term, then you can start accumulating this stock, around the current levels because we have already seen decent correction. When it comes to ITC and L&T, they are definitely, outperforming the large cap basket, and they are holding strong. So we feel that L&T, ITC, one should maintain longs position. 2450 to 2500 is a short-term target for LT, and we are eyeing 400 plus zone, in fact 420 plus zone in ITC, and any dip in ITC can be considered as a buying opportunity as long as it's holding above 360 levels.
Are there any mid and small cap stocks that you have on your radar?
So yes, we have like a few names like AB Capital, wherein we are seeing strong, consolidation happening after a long consolidation breakout. So it's a very narrow range consolidation. So we believe that there's a possibility that we may see next leg of up move soon. Then we have stock like Exide Industry. As a disclosure, we have recommended to our clients also of late, and we are eyeing close to around 210 levels. Then we have Reddington, again from the mid cap basket, wherein we are seeing, positive tone continuing. Then we have Manapuram, and lastly on the list, NCC.
So what is the kind of upside one can expect in these stocks that you mentioned? Any broad range that you'd like to specify?
Yeah, so in case if the view is short to medium term, we can anticipate like in 10 to 15% kind of a uptick in next 2 to 3 months.
How should investors approach the banking and information technology stocks now?
So banking is something which is helping the market to recoup the losses in the recent past. We have seen that all recovery which we have seen from the recent bottom, banking and financials were on the front foot. So we believe that this tone should continue from the medium term perspective also. As long as we are holding 39,300 in the banking index, one should continue with the positive bias. IT, on the other hand, slightly on the back foot. So with IT, especially the IT majors, HCL Technologies looks comparatively stronger. Rest of these stocks are still hovering in a range.
Skymet and the IMD differed in their forecasts for monsoon this year. How should one approach the consumption theme, FMCG, consumer durables, discretionary spending, etc., in the back of these developments?
So interestingly, that FMCG as a sector is trading at the record highs. And if you have noticed that stocks like ITC, HUL, Britannia, they have done pretty well of late. So yes, selectively one can continue to look at FMCG as a basket and utilize this, positive momentum to continue with the positive side. But yeah, other themes like discretionary spend and consumer durables, there we are seeing more of underperformance. So be it Voltas, Whirlpool, Jubilant Food, these stocks are not participating in the move yet. So for a time being, yes, one should avoid these stocks in case if the view is very short term. But from the medium term perspective, we feel that stock like Voltas is a good accumulate. And similarly, Jubilant Food also, like if it corrects 5-10% from the current levels, it's a good buy.
Thank you so much, Ajit, for your time today. Would you like to give us any disclosures about the stocks in the sectors that we've discussed?
Yes. So as a disclosure, a disclaimer, I'm personally not holding any of these stocks, but our clients may have position.
Thank you so much.
Stocks of FMCG companies like HUL and Nestle fell last week after private weather forecaster SkyMet predicted below normal monsoon due to El Nino conditions. Although India's official weatherman calmed the nerves with a forecast of normal monsoon, the fear of El Nino still looms large. But what is this phenomenon? We decode it for you.
An El Nino arrives in a cycle of about every 3 to 7 years. It is the warm phase of the El Nino Southern Oscillation, or ENSO, a climate event that happens when warm water in the Pacific Ocean interacts with the atmosphere, causing various weather events around the world, from droughts to floods. El Nino, meaning the little boy or Christ child, was originally recognized by fishermen off the coast of South America in the 1600s. With the appearance of unusually warm water in the Pacific Ocean, El Nino affects the weather in large parts of the world. The effects depend strongly on the location and the season. The strongest effects on precipitation are in Southeast Asia and the Western Pacific Ocean, especially in the dry season. Normally, strong winds blow westwards across the tropical Pacific, the region of the Pacific Ocean between the Tropic of Cancer and the Tropic of Capricorn. These winds push warm surface water towards the Western Pacific, where it borders Asia and Australia. And due to the warm trade winds, the sea surface is normally about 1.5 feet higher and 7.2 degrees Celsius warmer in Indonesia than in Ecuador. And this westward movement of warmer waters causes cooler sea waters to rise up towards the surface on the coasts of Ecuador, Peru and Chile. This process is known as upwelling, and this upwelling process also influences global climate. In summer months, temperatures over much of India rise to as high as 110 degrees Fahrenheit, while the Indian Ocean is much cooler. Consequently, the warm air over the land rises, and cooler, moisture-bearing air blows in from the sea, bringing heavy rains to the region. ENSO-induced warm zones in the Pacific cause the warm air over them to rise and initiate circulation cells. Such cells along northern Australia, Indonesia, and the eastern edge of the Indian Ocean could have their downdraft sides over a nascent monsoon circulation cell in the Indian Ocean, which would disrupt its formation, causing poor monsoon rains over the subcontinent. This Indian monsoon model thus implies that El Nino years should coincide with deficient monsoon rains. Analysis by the India Meteorological Department shows that of the 18 El Nino years between 1880 and 2006, 12 coincided with deficient or below normal rainfall in India. I will achieve, I will fly high. I am the SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The El Nino event of 1997-98 was the first to be scientifically monitored from beginning to end. That is all for today. For more news, views and analysis, please log on to business-standard.com. Thanks for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.